The Nasdaq just refuses to catch a momentum bid and make it back to new all-time highs. Software stocks have been just obliterated, and financials are actually starting to weaken even after strong bank earnings last week. Over the weekend, we get new tariffs announced as a lever on Greenland, it seems, but ironically, that's as we're headed straight into a Supreme Court opinion date this Tuesday on old tariffs. But despite all of this drama and nonsense, small caps continue to perform well. And that honestly makes it pretty difficult for me to want to get overly bearish on the broad market as a whole. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 10 plus additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame talking about candle structure and location as we always do. In terms of structure last week, we're left with a small-bodied green indecisive doji bar, which simply implies that the candle close was ever so slightly over the opening print, but we know that the defining characteristics here are the large upper wick and the large lower wick, which simply tell the story that buyers tried to get a rally going, gave it all back and some, and then into the close, sellers couldn't really step up and keep prices pinned lower, so a whole heck of a lot of action for not a lot of progress in any particular direction. It's very neutral when it comes to structure. If we're thinking about location on the bar-to-bar count, a very equal low and a slightly higher high. Most importantly, a candle close right back down inside the midpoint of the previous week's range. Again, a lot of wiggling around for virtually no progress. If we're thinking about look above and fail on the bar-to-bar count, I think it's more important to kind of zoom out, take a step back, and just think about look above and fail from a weekly breakout perspective, right? We have this previous all-time high 689 acted as resistance. We finally got a decent breakout, and we still technically closed the weekly bar above, but there is zero momentum here, and that's kind of reasonable considering that the Nasdaq is not pushing out to a new record high. I think early on in the week, if we're going to monitor for a look above and fail, it very simply has to be 689. Now, if we fail underneath 689, then the line in the sand simply becomes the 2-week equal low. The manager's survey just came out, and people are still fully invested out there as of Thursday's report. So I would expect some profit taking if we take out the 2-week equal low, which is really 686. Now, the next question might become is, if this does take place, if we get a look above and fail, and ultimately we drop the 686 and we pull back, is the weekly chart destroyed? Is the trend automatically going to flip to down? And I think the answer is no. Technically speaking, we did achieve a daily downtrend here, but we did not see a daily downtrend here, and we did not see a daily downtrend here, meaning that this is a soft higher low, and this is a soft higher low on the weekly timescale. So if we pull back, and let's just say that we fail underneath the 2-week equal low, we're pulling back from the highest high in the trend count, and it's still possible that a firm higher low via a daily downtrend can take shape. Now, where would I want to see that higher low? Certainly at or above the bearish engulfer highs from October 10th, as well as the November 20th session. And as of right now, that's loosely confluenced with the weekly 20 SMA, which is the orange moving average on your screen. If I break out the Fibonacci's and pull from the low of this bar up to the all-time high, it's right on the money with a 50% retracement. Now, if we take out the 2-week equal low and don't even get to the 20 SMA, or that 675 level, that's the number down here, and we support over the Fib 38.2, then fine. Technically, it's still just bull flag consolidation. I would think through this as a higher low nonetheless on the weekly timescale. That's a rough suggestion of about 678, 679. Let's take a look through the lens of the weekly volume-weighted average prices, the anchored view apps, if you will, and we're still above the entirety of the stack. So although, yes, we're starting to talk about the possibility of a failed breakout here, it hasn't happened yet, and I just want to be very clear about that, right? We're talking about threats to the base case. We've still closed over the 689. It's still possible that this market can continue in the upward direction. We're just starting to see some warning signs out there, like the Nasdaq being so stubborn after trying to break out of its wedge, and financials starting to deteriorate a little bit. But we haven't actually done anything yet on the weekly chart for the S&P that is overly detrimental. If we think about what's going on from a volume profile perspective, you'll also see here that we've still closed over the high volume node. If I just do something that looks like this, you could see we've closed above. So I think it's very critical that we just watch the 2-week equal low, and if we pull back underneath it, I'm looking for a higher low on the weekly timescale. And of course, I'm going to acknowledge that, yes, a failed breakout is not at all bullish, and it doesn't really set us up for the cleanest higher low and like easy trend continuation, but the trend just simply isn't broken yet. That's the main thing that I'm trying to get at. And we could even spin it more optimistic as well and say, okay, if this is a successful breakout of the wedge, what's the measured move? We talked about it a little bit last week, but if we just take a range double to the upside, not that we have to go to 730s this upcoming week, next week, or even the week after that, but that's technically the measured move, right? If we're going to be optimists here, then fine, let's look for some upside. 730 might be the number to have in the back of your brain. Let's take it on down to a daily chart now, and let's start to evaluate this week's expected move. If you're not familiar with this week's expected move, it's this gray box right here. This is the study. If you're not familiar with how to set it up, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number is technically 699.93, just shy of the 700 figure. That would technically suggest a new higher high in the trend count and a brand new all-time high as well. If we're contained by the lower bound, you can see the number is 683.39, and unfortunately, that is technically a lower low. So the expected move is more neutral than anything else. We can't just lean into the top side. We have to also acknowledge the downside. If we're thinking about the trend here, technically we have lows, higher lows, and this is a firm higher low. We did achieve an hourly downtrend by taking out these lows at 689 from Friday of now 2 weeks ago. So the fact that that's a higher low means we need to stay above 689 if a daily higher low is going to continue to emerge. We need to see consolidation here and some sort of Brigade bolt to bring us into a new higher high. You can see that for all intents and purposes, this is a high. It's a higher high from here to here, but now it's just an equal high as of last Thursday. Technically, if you want to get nuanced with me, you could start to say, hey, double top here under the neckline, and I'm short, right? Well, guess what? That makes total sense. And I would say, awesome, no problem, because what does that exactly align with? Well, on the weekly, we fail 689, and then we have the 2-week equal low at 686. You've lost the higher low on the daily time scale. You're flipping into a daily downtrend. I would expect at least a test of the 50 SMA. That's down here at 679.75. If the daily trend is going to flip to down, that's what we need for a weekly higher low. Where's that line in the sand? Right here. Engulfer bar high, October 10th is slightly off the screen to the left, and that would be here at 675. That's the next big spot to watch for potential support. As long as we're over 689, though, I don't want to get overly bearish unless I need to. If we're just consolidating, if we're just churning in here, yes, I think money's rotating. I wouldn't be aggressively bullish either until we get that confirmed Brigade bolt up and over the all-time high at 695.50. I do want to drop it down to the hourly chart here to talk about the failure of the bears into the midweek, right? You could see here that we swept the all-time high and came in hard. I would also point out before we talk about bears that we have an unrepaired all-time high here from the overnight session on CPI at 697.30. Typically, markets will not make an all-time high. That's the end-all be-all all-time high for a long period of time in an after-hours session. You want to make that in the regular trading hours session to satisfy sort of auction theory. Now, if we're thinking about this breakdown, though, what happened primarily on Wednesday, I just want to reinforce one more time. I know we talked about it on Wednesday's midweek market update, but if bears were going to make a stand, they needed bear flag consolidation here underneath the weekly breakout level, and look at that recovery into the close. Now, I'm not going to sit here and say that the rest of the week was the most compelling and strong thing. We gapped up, gave it all back, technically a gap fill reversal, and we continue to hold that level on Friday. I'm just pointing out that the sellers didn't really run away with what was the first attempt at failing the weekly breakout level, that 689. So as of right now on the hourly chart, if this is a major low, any higher lows can stick over the 689. I would probably start leaning into longs that look like this, or if we just hold in here, I would lean into longs that look like this to repair the overnight all-time high from CPI. It's kind of the bull case headed into the early stages of this upcoming week. Now, as we acknowledged on the weekly and the daily timescale, if the bears do run away with this, let's just say that we're here, I would still be monitoring for a higher low first, but if we start to get lower highs on the hourly descending triangle, something along these lines, and then ultimately we do Brigade bolt out to the downside, 689 gets lost, great, bears are making an equal low, right? This is the daily higher low. If we lose that, awesome. That's how we sort of get that deeper pullback that we just talked about on the daily timescale. So I think it's very clear how all of these things come into sync. And I think it's very, very clear that the 689, 686 have to be the top watches for the S&P 500 in the near term. If we lose this low, say goodbye to the daily uptrend. If we break out through this, guess what? The trend continues in the upward direction and we get ourselves a brand new higher high. If we do get a higher high, obviously, we can then afford a higher low in the trend count should one have to shape up. Let's come in here with a couple of fib pulls as well as the intraday anchored view apps. I want to start from this one back here. And just point out, as we talked about on Wednesday, that this was a perfect hold of the Fib 61.8, which is bullish. And now, if we could stay over the Fib 38.2 and roughly 689, that would just satisfy the conditions for not only a higher low, but comfort from a Fibonacci and range perspective. If we come in from the high down to the low, once again, bears really wanted to find acceptance underneath a Fib 38.2. And even on Friday's mid-morning pullback and that sort of quick washout, it's not like we broke underneath and spent all afternoon on Friday consolidating here. Yeah, it wasn't the most compelling day where we sort of rallied into the close, or not into the close, but rallied off the low, then went sideways. But where is it taking place relative to this range, A down to B here? It's not like I would say the majority of the action still technically over the 61.8. So odds should say if we're here, right, this is still the base case. Now, we've talked plenty about managing threats to the base case. And one more time, just, I'm sure I've set the level too many times for you now. 689 is the number to beat if we're above. I just cannot maintain an overly bearish stance. Let's hit it with the intraday anchored VWAPs on the spiders, and then we'll jump into market internal supporting evidence. Notice the clusters right here. Like, once again, if we're over this area, it's just very hard for me to be a bear. It might not be a momentum breakout ready market, but it's just not as bearish as it could be. If the bears were going to step up Wednesday, that was their time to shine, and it just didn't happen into the close here. Let's go ahead and move on over to our market internals. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. What do we see here net on the week? Remember that the week was an indecisive doji. I would say volume flows perfectly reflect that of a neutral market. It's not like we had substantial volume inflows, but remember, equal opposites, we did not have substantial volume outflows. I don't think it's worth getting aggressively bearish just because these internals are flat. If we take a look over here at the advanced decline line, pretty decent amount of the week was spent over the zero mark. We'll give credit to the sellers underneath zero on Friday. I would maybe just point out that the index score was mostly under the zero line. It was mostly red throughout the week, but that's kind of what you would expect when you're gapping and fading for a majority of the sessions. If you look at the cumulative build, I would argue that it actually leans maybe neutral to slightly bullish, with a majority of the cumulative ticks actually being green into the end of the day. Friday was that one day where, yeah, the sellers made a little bit of progress there in the downward direction. I would say in the backdrop of what was happening the other 4 days, it's really more neutral than anything else. Let's jump on over to the market profile and what's going on with value. If you're not familiar with profile, by the way, check out the video tutorial in the top right-hand corner. Value's almost unchanged. Like, in aggregate, take a look at Monday here. Then we have Tuesday, Wednesday. Sorry, I'm a day off here, so shift your days. Thursday. No, I'm not. What am I saying? There's 5 days in a week. There you go. Like, value, if I had to just split this visually, this is pretty unchanged through the week. Wednesday was the outlier day where I would just say, once again, that was the day for sellers to make a stand, and they simply didn't. Value did. Look at the C period print on Friday. If sellers were going to run away with it, you would think that they'd gravitate towards this point of control, tag up to the VPOC at bare minimum, and it just didn't happen. So as long as we're over that, and let's just go back over here to our hourly SPY. As long as we're over, roughly, if you really want to get nitty gritty with the levels, if we're opening somewhere over, let's say it's a small gap higher on not Monday, but Tuesday, markets are closed on Monday, over 691.75, like, no problem. Value from Wednesday is an island, and basically the market's content here, which is bullish closer to the highs rather than on the lows. So I don't really see enough of a compelling argument to just throw all the longs out the window and just immediately get bearish the market until the market starts to spend more time under 689, and then ultimately when it does break, if it does break 686, that's where I'll change my tone. So very clear through the supporting evidence. Let's take a look now at the dangerous index, which of course is the Nasdaq 100. Let's bump this thing up to a weekly time scale, and as always, thank you for bearing with me as I just reconfigure the chart for the weeklies. There we go. Let's take a look at the Nasdaq. So in terms of candle structure and location, just like the S&P, you can see that we're left with that similar structure. It is a doji, but it's a red-bodied doji. So all that would imply, right, is that the candle close was slightly underneath the opening print. Still, we had buyers try to step up, they gave it back, and then the rally couldn't quite retake the opening print into the close of the week. A lot of wiggling, rather, I should say, a lot of price movement for not a lot of progress. Bears did not really step on the gas here. And it's even more interesting when we consider candle location here on the Nasdaq, because you can see a much more meaningful higher high attempt, but equal opposite, right? On the low end, you could see a much more meaningful lower low. We would technically call this a broadening formation rather than a contraction, and that just tells us that nobody has any idea whether or not there's more compelling evidence for the longs or the shorts. Now, in my book, it really would have been nice to see some acceptance near the highs here, signaling a flat A fat flat top breakout. There we go. Maybe it is a fat flat top. That thing's fat with a PH, right? So it just didn't really go. So more indecision. And I think one more time, I know I've been talking about this for a couple of weeks and it's not what people want to hear. Trust me, I could see it in the comments. Everybody's like, it's got to be bullish. It's got to be bearish. It's got to break out. Have some conviction. I can't have conviction if the chart's literally not telling me to have conviction. Right? It's about as neutral as it gets here. Maybe we have equal highs and higher lows, which is more of a bullish ascending triangle. I just can't really lean into the idea that this is a momentum market, though, with software getting absolutely annihilated. The Mag 7 certainly underperforming. If we break out, before we break out the fibs and such, let's just talk about trend. This is still the possibility of a weekly lower high. This is still the possibility of a weekly higher low. There was a little bit more of a daily downtrend threat here. So on a deeper pullback, any violations of the 20 SMA on the weekly, I would tend to think don't go so well for the Nasdaq. And now that we've really attempted to break through the top end, let's just draw the original pennant, right? If we do something that looks like this, we've got multiple attempts through the resistance trendline that have failed. This would be a more compelling place to look for the look above and fail, just because it's not as broadly diversified with financials as the S&P 500, right? So if you're looking for shorts, the Nasdaq's the place to be because you already have a potential weekly lower high if the daily trend is going to break more firmly in the downward direction. Let's break out those fibs from a high down to a low over here, just pointing out that we're still over the fib 61.8, so I don't think all hope is lost, but you are treading on thin ice over here. If we break out the Nasdaq anchored VWAPs from a weekly over the entirety of the stack, once again, not the end of the world yet, but you are treading on thin ice. Let's take a peek over at the volume profile. What do we have from that perspective? Let's take a look. What do we have over here? Where's the high volume node? That is the high volume node, and that's right where we closed on that QQQ weekly bar. So if it's higher, it's higher. If it's lower, it's lower. You got to kind of take it step by step in here. And I would say that the main levels to watch are, of course, your 628, 629 breakout level here. And to the downside, you really want to be watching the lows of 3 weeks ago now, around roughly 610. So let's not just look at it through a microscope on the weekly. Let's get more granular on the daily time scale and have a closer look at the action here. If you're not familiar, once again, expected move is this gray shaded area. We already pointed to the tutorial. You could check it out. The upper edge is at 631.36, technically implying an attempt for an equal high breakout that we were just talking about through the lens of an ascending triangle on the Qs. If we take out the lows of this, right, is that the end of the world? Well, the expected move is right on par with sort of the bear engulfer highs, again, close to about 610, 612. If we can support around that area, in my view, this just starts to become a little bit more of a range on the Nasdaq daily chart rather than an aggressive downtrend. So that's what we should talk about next. What is the trend of the Nasdaq daily? Well, you've got lows, certainly higher lows here, higher lows here. This is roughly a higher low. And along the way, you've got highs. This was a lower high. This is technically a higher high. This is an equal high. You pretty much don't have a trend here in the short term. This is noise inside this box here. So all things considered, I would lean into the idea, like we talked about on the weekly, buyers are continuing to make progress or sellers are lacking progress via the higher lows, but we really haven't seen acceleration or momentum through that original trend line back over here. You broke a couple times. In a stronger market, what I would have expected is maybe some follow through for a day two that actually goes out to a stronger higher high, something that would have looked like potentially this if we just draw it in. And now you have much more clearance, right, for a higher low to emerge. Maybe you get a hammer here, and then you continue the breakout back to all-time highs. This is what a stronger market could have looked like, but we have to deal with the market we actually have. And in this box, again, I know people want conviction. They want definitive answers. The market's got to go up, right? They want to hear that. They want to hear the market's got to go down. In this box, I really don't have an answer for you on the Nasdaq. It looks more like couple of breakouts have failed. We're not really breaking down to lower lows yet. We're still roughly supporting at the moving averages, the 20 and the 50 SMA, orange and blue respectively. We're still over the bearish engulfer highs from back here and here. I don't want to be overly bearish, but I also don't want to be overly bullish. It's like a wait and see game here on the Nasdaq as to whether or not this will ultimately drag down the S&P 500. If you want more of a definitive look, if the market breaks this trend line on the Nasdaq to the downside, if we do this, and some kind of lower high emerges here underneath 613, you'll hear me shout from the rooftops, hey, caution, Nasdaq is flipping into a daily downtrend where we should absolutely respect more of the bear trade rather than the bull trade. So that's what I'm seeing here on the daily. Let's drop it on down to the hourly. Lack of trend, lack of conviction. You can clearly see once again, here's your big breakdown on Wednesday. If sellers were going to run away with it, all they really needed to do is just prevent an equal high, right? Because that keeps things neutral. They could have easily set a lower high here underneath the Monday, Tuesday lows at 622.50, and that didn't happen. Now you can see that we are getting bear flag consolidation underneath on Friday, but that's after pulling back from the highest high in the trend count here. And I do believe that there's a little bit of a wonky wick on Thinkorswim. If I go down to a 5-minute chart, yeah, that's not technically the true wick. We got in here close to about 627.75s. So it's not a perfect equal high. That wick is a little bit deceiving on Thinkorswim, but for all intents and purposes, I still just think that this is a neutral trend here in this box. You've got highs, equal highs. Maybe this is a slightly lower high, right? Let's even give the bears the benefit of the doubt. You have lows, lows, slightly lower lows here. Is this possibly a higher low? Again, it's just very, very difficult to make a strong conviction note on the Nasdaq, even on the hourly chart here, seeing as to how the price action's ultimately been performing. Now, if we remain underneath 622.50, maybe I have a little bit more of a bear bias to retest the bottom end of the range. But what should we remember about ranges, right? Until the range definitively breaks, ultimately what you want to do is buy range lows and then sell range highs. Right, so until we get a move outside of this box, which is 628.50 and 616.25, maybe I should use green down there as well, until you get a move that definitively does the Brigade bolt on either side, something that looks like this or something that looks like this, you're trying to buy lows and sell highs. That's it. Range trade, mean reversion, right back to the midpoint, like this, right back to the midpoint. So if you're good at range trading, by all means, do your thing in here. But for momentum traders, we had a decent week. There's some pretty good setups out there, but at least on the index level, there's not much to really do here, right? We can even come in with the anchored VWAPs, and what we'll notice is that just the entire thing's a cluster. Just look at this. You're clustering up here. You got some support below. You're underneath a little bit of the stack. You've got clear overhead supply from this. It's just not so clear on the Nasdaq. So remember, not knowing is okay. You just have to admit that you don't know and don't make stupid trades that cause you to bleed out in the midpoint of a range. Right? That's it. Like you don't have to be a hero and always know which way the market's going to go in the middle of a balance. So just don't fool yourself into thinking that you know better. That's it. If you've been struggling in the range, just foot off the gas pedal. That's it. So there is your NASDAQ hourly. Again, I wish I had stronger conviction in a potential direction for you, but I just don't. As I look to semiconductors, they look fine, but if I look at software, it looks awful. If I look at the Mag 7, it looks a little soft. So maybe it leans a little bit more on the bear side, but then I look over to the IWM and I'm like, well, no, breadth is technically decent. Data centers are performing well. Like those crypto miners turned data centers are performing really well. It just doesn't really, it's hard to build an edge there in that neutral NASDAQ is basically what I'm saying. So what's going on from an internals perspective at the NASDAQ exchange? Volume flows, again, more positive than they were bearish. If you look at this, I'd say it's equidistant, a little below, little below, little above, little above, little below. Maybe a little above here as well. So it's really fairly equal. And once again, a little above, a little below, a little above, a little above, a little below. What am I going to do with this? It's just the internals, the exchange level are not offering a substantial divergence where I could say, oh yeah, under the hood, everything looks great. Forget about what the daily trend looks like. Just buy it all. There's a huge strength. It's not there. It's really not there. So day by day on the NASDAQ until we develop a stronger trend. If we get on over to the NQ market profile, let's take a peek at what we've got here. If we just zoom out, what's going on with the value areas, we'll do the same exercise as the S&P. Here's value, here's value, here's value. This time we actually do have 6 days on the screen, so omit the last Friday, but that's fine. Here you go, and here you go. I would say that primarily value has been stuck where? Mostly in the upper portion of this range. A little bit of value lower on Wednesday, but look at C period once again, very similar to the S&P 500. If this is your value area high, basically you dipped a toe, and then where did buyers ultimately settle? Right here, making small progress in the upward direction. So as a potential higher low, it's on the table. I would say that one of the things you should just watch for early this week for the NASDAQ in particular is, do we retrace the A period single prints and the thin structure from Friday? And do we find acceptance once again inside of that Thursday value? If we do, that would be slightly more bullish, and maybe we monitor the situation at the top end of the range. But again, at the top of a range, it's more of a sell rather than a buy until we actually have a convicted breakout, or a convincing breakout, I should say, with a clean higher low above. Let's go back on over to the platform and let's finish up with, of course, everybody's least favorite index, although it should start to become their favorite, the IWM. What an absolute monster this thing has been. Let's just do a little bit of this. And again, as always, thank you for sitting with me as I update the chart. Beautiful. So on the weekly timescale, I mean, what a breath of fresh air. This is a solid green-bodied bar, little bit of an upper wick, not much, little bit of a lower wick, not much. it looks much stronger than both the Nasdaq and the S&P 500. Strong small cap participation and rally in the upward direction speaks to broadening breadth. And on the bar to bar count, certainly you could see that there's a substantial higher low as well as a substantial higher high and a candle close completely outside of the prior week's range. So, when I think about the Nasdaq being the end all be all for the S&P 500, I think, hang on a second, small caps are actually suggesting the opposite. Really, small caps, although maybe a little bit more of a signal off of a dead low, typically will only rally if economic conditions are generally improving rather than deteriorating. Think about what these things are. These are, companies that require huge amounts of financing ultimately, many of them just not even turning a profit yet. And you mean to tell me if S&P is going to break down and the whole market's going to be bearish, wouldn't these be the first to fall, the unprofitable junk that exists out there in the world? I mean, it's just the narrative doesn't really align, right? You technically don't really see broad-based participation in unprofitable companies right before a market, washout, right? Unless this turns into a major look above and fail, which, never say never in the market. Anything can always happen. If this ends up losing the weekly trend in a major way over the span of like 1-2 weeks, we get this nasty washout. Let me just draw it in with some bars. God forbid we end up getting a candle that looks like this, then a candle that looks like this. If there's a huge look above and fail on both this high as well as this high back here, then yeah, that we have to take that in stride as a major signal. But let's deal with the chart in front of us right here, right now. We'll monitor the situation intra-week, intraday, of course. Right now, it just looks like a successful breakout. It's the only index with a successful breakout moving over these prior highs with any sort of conviction. So to me, that is absolutely bullish. If we come in here from this last major low up to the high, Fib 38.2 pullback is right on par with this prior resistance, which could act as newfound support for a higher low. If we take that off and throw on the anchored view apps for the smalls, you're above the entirety of the stack. And once again, just extend this to the right, the bulk of the stack, these two in particular, over the next couple of weeks will be confluence right at this prior level. It makes sense to me that there's an opportunity, if there's a pullback, instead of seeing that scary red bar I just drew in as a sketch, it might look something like this, like a small red bar here, a little bit of a pullback, lower wick off this prior high, right? And they don't have to be red. This could be a green-bodied weekly bar, right? Something like that is possible, and then that's your higher low, and we continue in the upward direction. So there's nothing overly compelling for the bears here on small caps, in my view. It looks bullish. It looks like a successful breakout. It's been performing well in terms of its volume shelf. Huge breakout here. Right, not even close to any resistance from a volume perspective. Brand new 52-week highs, all-time highs, the whole 9 yards in smalls. Let's take a look over at the daily chart of the IWM, and let's see what's going on over here. Again, nearly a vertical move in the upward direction. Hard to say anything bearish about the trend. If we're looking at expected move this week, 270.43 on the upside, 261.09 on the downside. All-time high, and certainly a higher low if we were to catch support off the lower edge. I would still, once again, give this the benefit of the doubt all the way down to 258, and even here, that's that weekly level we were just talking about at 252.75, right? Think about where your last low is, or the last hourly downtrend was on the small caps. It was here. If this is your last higher low in the daily trend count, or you could just say it's the establishing low, so let's just remove HL, it's the low, this is still a higher low relative to that low. It might be a deeper pullback than what you'd like, but let's slap on the fibs and you would be surprised to find, or maybe not surprised to find, I think it makes visual sense here. It's right around the range of the Fib 68.1. Right, so no problem there. That's the line in the sand fib. This one happens to be the Fib 38.2. No problems from this IWM daily chart perspective. Let's zoom in a little bit more on the daily. Let's give a little auto zoom here so it's not so funky. There we go. I just want to point out that, even here where it looks like, okay, maybe an exhaustion gap up, we fail back down into the 2-day range. Look at this. Very nuanced on Tuesday, or was that Wednesday? It's Wednesday. You sweep the low of Tuesday, and yet you don't pull back to the range low of the Friday, Monday consolidation. Like, that's pretty darn strong, and instead you close as a bullish engulfer. Inside day on the Friday session here. So again, it's very possible taking out this low, you could start to see a little bit of a pullback, but again, everything's in service to a higher low on this IWM daily chart. Let's take a look at the hourly, and it's just vertical, right? You just want to be owning small caps at this point, looking for upside, getting a big, gap and go on that Thursday session, consolidating here on Friday. I think that you could be a little bit more nuanced than just the low of the Friday session. You could use 265.50. If you break down underneath that with a lower high, that's where you could maybe establish that deeper pullback to the lower edge of the weekly expected move. Now, of course, one thing that I should point out here is it would be, how should I frame it? it would not be, I should say, unreasonable that if the small caps need to pull back into this zone to cool off and set a higher low, and again, it could be here and it could be here, and neither of those would be an issue this week. If that needs to take place, that could act as a headwind to the S&P 500. But let me bring out the back pocket card. What if, playing devil's advocate here, what if the Nasdaq takes the baton? What if they actually go out there and buy technology this upcoming week as the small caps pull back, the Nasdaq catches a bid? What do you think happens in the S&P 500? Probably more of a breakout. Remember, although small caps speak to the broadening nature of the market rally, the S&P 500 is still like 35-ish% weighted towards tech. So although this is going to prevent an S&P breakdown as the Nasdaq's weak, if the Nasdaq ends up breaking back to the upside, it certainly would fuel S&P higher, right? So just sort of thinking through the opportunities and the different cards that could be played by the market, that's a configuration that I would keep in the back pocket. Let's go ahead and throw in the intraday anchored view apps. They're going to be a little bit less meaningful over here because, of course, we're above the entirety of the stack. There's really nothing to say other than Confluence for a higher low here early on in the week and Confluence here for a higher low early on in the week as well. Looks pretty darn good on a smaller time frame. Let's jump into our Russell side of the internals. All of the volume flows were more positive here, a little bit more even split through the advanced decline line, and a little bit more of an even split here on the cumulative builds as well for the tick on the Russell. I would say once again, it's done its job. It's clearly pushed out the strong new all-time highs. It could easily afford a pullback. A little bit of weakness here on the Friday session as we just balance off near the highs. If we get the Brigade bolt to the downside, no problem. Offer it as a little bit of a check back in the S&P 500, and then the question just becomes the wild card, the Nasdaq. What do they do there? If it gets bought up, then fine, no problems in the S&P. If the Nasdaq's still sideways or even weak, that's where I would start to say, all right, look for that stronger pullback in the S&P, maybe tests of that 689 level. Let's finish up the Russell with the market profile and see what's going on over here. Let's zoom out on this bad boy. There we go, and you can clearly just see that value has shifted higher. Here's the 2-day range from Friday, Monday. Here is Tuesday, Wednesday, and here's Thursday, Friday. There we go, 2 chunk increments. Again, if you take out that low, it's the same level we just talked about on the IWM cash. It's the equivalent of the value area low, value area low. There's pretty thin structure, right? There's thin structure through here. I would expect the tag up towards the bulk of that consolidation, which is slightly lower as we described over here, just to be congruent, right? It's probably talking about, instead of 662.50, you could probably call for slightly lower at 662 flat even. Let's do something like that, just because that's more reflective of the value area. Once again, see how you're chopping off the highs and the highs of that bar. Good. Let's go back over here. It's the same thing. So 262. You lose value here. You get thin structure retracement, right? What goes straight up can easily come straight back down, and then we try to catch support there at 262. That is the number where I would look for the first higher low if small caps decide to pull back this upcoming week. Let's get on over into our sector watch now for the S&P 500. Who was leading, who was losing, and where was the weight? There is some defensive posturing taking place. We could see here that real estate leads the pack up 4.09%, followed by semiconductors. Then we have industrials, staples. At the bottom of the barrel, you could see it's communications, discretionary, and then financials, as well as healthcare closing out the week red. Now, semiconductors are the most influential component of the XLK at this moment because of everything that's going on with AI, but software was absolutely brutalized. So the XLK, the heaviest weight sector, remember SMH is a component of the XLK, but the XLK itself for the S&P 500 actually didn't perform all that well, right? It was only up 30 basis points there. It technically outperforms the index, but it's not like it had a 4% week. So this really looks more like rotation to me. I would even go as far as saying defensive rotation. That'll become obvious when we take a look at the XLP structural chart. Speaking of structural charts, let's get started. Real estate, right back into the range. This is textbook look below and fail, right? There you go. Up and targeting the top end of the range, no problem. It's unfortunately one of the lighter weight sectors for the market, so it's not going to propel your S&P to new all-time highs, but it will prevent, as we've seen, right, as much weakness as what we're seeing in the Nasdaq. Here's your SMH semiconductors. Thank you to Taiwan Semiconductor for the big gap up on the Thursday session, right? Thursday morning earnings. But look at these bars. It's like you gap up and you fade. You open higher the next day and you fade. So are people tired? Are the semiconductors tired here? Intraday, absolutely. It's like all the action's happening overnight, and it wouldn't be shocking to have to repair some of this structure, the thin gap, or even come all the way back down to this breakout level for a retest, firm up a higher low, build a new base, and then go higher. right? This is not unreasonable stuff for the semiconductors. So if you lose semis this week on a pullback, right, intra-week we could be red, that's fine. It's not necessarily bearish for the trend count here, but it would be painful over in the S&P 500, right? How could it not be? It's up this week on some sort of what looks to be exhausted gaps, and that's keeping the S&P flat or just churning near these highs. If you lose semis, I don't know what else it's going to be that keeps the market higher, because you're also seeing some weakness in financials, which we'll get to. Look at industrials pushing out higher. This is a little bit better in terms of sector weighting. Real estate's like less than 2% or something like that, 1 point something. And then you've got industrials roughly closer to 8%. So this is helpful. That looks okay. But again, getting a little extended here. Is it possible, right, that we could come in and try to set a higher low? Absolutely. If we take a look at staples, this thing's just like vertical. Now, typically, I like to talk about staples as being a little bit more defensive, and I think that's absolutely correct here. So a big shift over to some defensive as IVG, and I will just bring this up as we're going through IGV. There we go. This is software, right? This is not just tech including the semiconductors and such, but this is more specifically software, has been absolutely brutalized. I mean, look at this thing out to a new low underneath the low from November. Right? This is that NVIDIA earnings day back here where, yeah, there was some recovery, but oh my goodness, it's been nasty. Really, really a nasty week for software where your tech components just, it's that push-pull. So here we go. Look at your software. Look at your semis, right? They're almost opposing charts, right? Where software is clearly straight down, semis are clearly straight up. That results in XLK, we'll just skip right to it because it's the heaviest weight component, completely sideways. Right? So you're not going to get follow through in the S&P 500 if that's the case. You need to be over this 147 and breaking out towards the all-time high. That QQQ Nasdaq needs to be breaking its soggy pennant, its soggy wedge, its saggy, whatever you want to call it, its unenthused breakout level. You got to get moving here if this is going to go. Otherwise, I think you have so much churn and burn. Everybody's sitting around scratching their head saying, all right, we're not really making money on semiconductors right now because every day seems to be, sure, gap up and then fade. We're not really making any money on software. I guess we just got to sell tech. Right? And if you sell tech, S&P's going with it. I would say you clearly have to watch this 143.75 and 147. Very obvious, very clear range. It's not rocket science over here on the XLK. You set some alerts this week. If you're above, bullish. If you're below, bearish. Headwind for the market. Let's keep going, though. Utilities. All right, utilities perking up a little bit. This is also a defensive sector. It's lightweight. We don't really want to see this pushing out to a new record high if it's going to lead the S&P to a new high. Let's keep going with energy. Energy is a little bit more on the inflation front rather than just straight up defensive, but it is a lightweight sector for the market. Let's jump on over to XLB. Materials, literally the lightest weight sector in the market, screaming to the upside, but again, like you don't want XLB breaking to new all-time highs as the market's trying to break to new all-time highs. You want the tech sector. You want the heavyweight stuff to be doing it. Let's keep going here. The long bond, not really doing so well as rates maybe creep slightly higher there into the end of the week. If we take a look at the communications sector, breaking to the downside with Meta this week, just like this starting to become heavier weight stuff, right? Communications really just has the Google component to lean into. That's the only bit that looks good right now, but you've got Meta breaking down, you've got Netflix in a clear downtrend, right? That's not Shopify, but rather Spotify, mirroring Netflix as well. Pretty rough there on communications. If we lose this 50 with more strength to the downside, again, it's just like it becomes a little bit more of a tough picture to justify to the upside in the S&P outside of semiconductors. That's really all that's keeping this sort of held together right now. It's like bubblegum and duct tape kind of thing. If you look at the XLY, not bad with Amazon starting to move a little bit more firmly, but I would say that Tesla becomes the threat here. So we'll watch that very closely. I like the opportunity for a higher low. I'm not going to write this one off yet. Really got to start getting this up and out of what was Wednesday's high at 123.65 for more upside in the market. And then financials. This is where we certainly should have some conversation as well. Big gap down on the JP Morgan earnings, or just rather a big sell side day there, where JP Morgan itself loses its daily 50 SMA. And look at these large upper wicks to end the week. I mean, we've hammered off the daily 50, but this breakout level, you really don't want to see a lower high and a movement back down in here. You cannot lose financials and semiconductors, right? We talked about semis possibly being ready for a pullback to sort of fill the gap below us, as well as just come off of an exhausted move. We've been gapping up but fading basically all day intraday. If that happens as financials look like this, you can kind of kiss goodbye the S&P 500, right? And then maybe the Nasdaq comes out on top as the clear victor, as a signal at least to not have trusted the S&P all-time high. Well, again, balance that with your IWM and the fact that the market rally is broadening out into some other sectors here. usually bad things typically happen in the S&P when everything is red. They're selling everything. There's no place to rotate into. I don't think that's a huge threat yet, but I can start to see the rotation getting a little bit more on the defensive side. And if those defensives start to slip, that's probably where we spell trouble. Let's finish it off with the XLV healthcare sector, of course. I thought that this looked decent on the retest of this prior breakout level and the daily 20 SMA. I guess not all hope is lost because it's an inside day on Friday, but certainly not a compelling close. I would have expected, a stronger bar here is probably a break back up through these highs to close back at the all-time high, and you just didn't really get that. So healthcare not really following through. It just becomes a little bit more, it's just another headwind, really. It's just another headwind out there in the market. Let's go on over to our ratio charts, which start to spell the same story, where tech is not doing anything impressive. That's not helping us. We know the XLF just flipped bearish on the break of its 50 SMA, and we could probably even put an X over here. This is just totally neutral. I could see the opportunity for a lower high, but I could also see the opportunity for a higher low. So neutral there. This is a problem. So all of a sudden, our top 4 quadrant is not really screaming risk on. It's more neutral to like, you're losing some stuff. This looks a little bit more defensive. We haven't really broken out on utilities yet, and healthcare, which we know is still technically defensive, kind of looks neutral. Right? So the picture and the tides are turning a little bit here when it comes to sector posture based on our ratios. Let's go to the ASET, where once again, very neutral. I would say maybe a check mark here. Check mark here for sure, going out to a new record high. Not a record high, but rather just a higher high in the sequence. Higher lows along the way. This probably gets an X, failing the 50 SMA. This might be neutral, trying to come off the low. And this is absolutely an X. So like in aggregate, totaling all of this, it's a mixed bag. It's not really pure play risk on anymore like it was into or through the summer, I should say, and maybe into early stages of the fall. This winter seems to be kind of a risk off winter. If we take a peek at gold ratio, small uptick here. Gold is kind of trading more like a momentum trade. We know that recently. I do think that this is interesting, right? This kind of neutralizes a little bit, not a lot, a little bit of the conversation where we could say something like, okay, well, if the market's risk off, then Bitcoin is probably the most risk on asset there is. Why is Bitcoin breaking out? And why did it trigger a green sailor shift signal? Right? To me, Bitcoin should have been, okay, through the trend line on a bear flag, and we're lower if the market's truly going to go to hell in a handbasket, and that's just not what's taking place. So this neutralizes that leaning towards like, okay, here comes the rollover. No, it's really just more neutral with another data point going back to the risk on side rather than also signaling risk off with the breakdown of the bear flag. If we got this at the same time as all the other data points we've covered so far today, yeah, I'm probably a little bit more concerned, but this actually looks okay. Let's take a peek over at the TLT ratio. No problems down here. That still looks good for risk appetite. Let's get into that's the B set. So let's talk dollar and rates real quick. A little bit of lift here, another kicking of the can down the road for the tariff decision. We'll see what we get on Tuesday. They said that they're going to release at least one ruling on Tuesday, so we shall see if they stick to their word. Here's a move higher on interest rates. I find this very interesting that rates are moving higher, and yet small caps are also moving higher. Typically, we associate higher rates with small caps performing worse. So keep an eye on this. If rates start to get too overextended to the upside, you're probably going to pare back some of the gains that we've seen recently in small caps, and that could act as a small canary in the coal mine for what's going on in the S&P 500. So please watch rates in the near term. If they continue moving higher, that would be a problem. Let's take a peek over at the inverted ZT Fed watch tool here, probably continuing to signal really strong odds for a pause as this moves in the upward direction. Let's go ahead and confirm that. Survey says absolutely here with a 95% probability of a pause in the next meeting, which is going to be on the 28th. I believe the same day that Tesla actually reports earnings. We'll get to the earnings calendar in a moment. You can still see that we are pricing in roughly 2 cuts, 1 and 2, into the very, very end of 2026. We'll see what we get, not this meeting, but the next meeting, which is going to be 2 months out, right? That's in February. March, excuse me, where we get an updated SEP. No update to the SEP in the January meeting here. So expecting a pause, probably tight-lipped Powell, not wanting to be in the limelight as he comes under all this pressure with the criminal indictment and whatnot. I'm sure he's just sick of it. He wants to just finish up his term and get on out of there and just like enjoy the rest of his life without the headache of everything that's been going on. So we'll see what happens with that. If we look at the calendar here, last week we did get CPI numbers and they actually looked okay. We got a decrease on the month-over-month core. The month-over-month non-core was pretty much unchanged from prior, that is, and the year-over-years were about the same as well. Now, a big shout out to Sky in the group. He's been sort of talking about this Trueflation gauge, and I actually thought that anecdotally I've been seeing similar stuff. So the Trueflation index is really suggesting that maybe we were closer to a 1.5% inflation. And what's driving this, in my view, and I think based on my anecdotal evidence it aligns, is a big decrease in housing inflation. Now remember, I'm not sitting here and trying to say that, oh my God, it's so easy and like everything's cheap. That's not what I'm trying to say. But the rate of change in housing cost has certainly decelerated. And I've seen this in the markets that I'm invested in. I've seen the same units being rented for the same price over the last couple of even years in some cases. Like the rental units where, in the markets I'm in, have not really, had that same ballooning effect of inflation that we certainly all experienced and saw through the sickness era, right? So as housing comes down over here, and again, this is just kind of a generalization with my anecdotal evidence. I'm not saying it's easy, like please don't misinterpret. We're just looking at the data. It seems like, okay, if housing's going to flatten out, this is 35%, I think, based on the most updated figures for CPI. That's 35% of the number. That's a pretty good progression here when it comes to, how it's being felt. If you look at food and beverage, it's also down here ever since September. Again, anecdotally, we've been doing some flying around for the holidays and whatnot. It seems like prices have been fairly stable, dare I say, rather than continuing to really ratchet up like what we experienced in that post-COVID moment. Now, household and daily items, though, does seem to be moving higher based on the Trueflation gauge. Anyways, I just wanted to bring this up as maybe a nice counter to the government number here, which is released at a 2.7 from the BLS. It could be a little bit hotter and a little bit overstated compared to perhaps what is actually going on. And again, it's an alternative perspective, which anecdotally I find quite compelling. So that is my 2 cents. And again, inflation coming down like this would suggest what? What's the point of all this? Like, why even bring this up? Well, if inflation's maybe better than expected, rates can come down, we can ease the pressure on the labor market, and of course, small caps continue to push out for their rally. The way that small caps are trading, honestly, it looked, this would, if the CPI gauge actually looked like this, then I could say, oh yeah, that makes sense, that small caps are actually doing what they're doing, right? So that is kind of an interesting take there on Trueflation, if that's a new metric to add into the lineup. Core PPI and PPI for the next cycle comes in kind of in line with expectations here, and core even beating. So that should suggest that the next CPI we get is also a little bit more on the light side. What else goes on here? Really strong jobless claims, and in the right direction, meaning that this looks pretty good in terms of consumer spending ending up strong still, and it's not like people are at a huge loss for jobs. We haven't really seen the anecdotes start rolling in either, other than Meta laying off from the metaverse. Now, this is maybe the next topic of conversation when it comes to the fundamental front. We got brand new tariffs announced over the weekend, 10% on all the companies, all the countries that you see listed here: Denmark, Norway, Sweden, France, Germany, the United Kingdom, Netherlands, and Finland. 10% starting on the 1st of February, ratcheted to 25% on the 1st of June if there is no deal on Greenland. So, trying to apply some leverage there, it seems, and we'll see how the market responds to this over the weekend or ultimately on the open for Tuesday. Regardless of how you feel about the tariff thing, the Greenland thing, the objective is to make money, is it not? Okay, if that's the objective, you need to be looking at rare earth metals. We're talking about MP, we're talking about CRML, UAMY, USAR, UUUU, all of those tickers we will cover as additional ideas in today's episode. Those names should be a watch based on this tariff announcement and based on its relationship to Greenland, which ideally, not ideally, but rather just the focus of that is the whole rare earths, right? I know they're talking about Golden Dome stuff and whatnot in here, but really, it's the minerals, it's the resources, it always is. Let's take a look over at the earnings calendar this week. We're going to start to heat up a little bit with some, what used to be the old Mag 7, if you will. It's sort of got kicked out, but Netflix is always the first name in the technology space to report their Tuesday after the close, interested in what they have to tell us over here. Beyond that, I would start to maybe pay attention to the Thursday session with Intel, Intuitive Surgical, and Capital One could be interesting here just because of the most recent news, as we know, on the whole credit card cap. I would also throw into the mix here GE Aerospace with everything going on in the rockets these days, Rocket Lab, ASTS, PL, Planet Labs, Lunar, right? All that stuff. Probably worth paying attention to GE. And then Alcoa has been interesting as an aluminum trade. The commodities, materials have really been off to the races, so that could be interesting to see what they have to say about the state of affairs in that sector. Let's jump on over to earnings insights, and I just want to point out here, based on bank earnings last week, so far, and this could change, right? We're very early in earnings season, but positive earnings results, positive EPS surprise. This is a 5 to 20% surprise. You can see here that has been not so hot for the market, right? You are not getting positively rewarded. So the line here is you could see 2 days before and after the report, percentage change, right? If you report decent numbers, you've been punished so far. If you report really good numbers, above 40%, right, of a surprise, you have gotten absolutely demolished. Down 14.7% in the 2 days prior to 2 days after your earnings announcement. So not really a rewarding environment out there, which kind of aligns with a little bit of the skepticism as we're talking about the Nasdaq 100. Let's go back on over to the platform and let's finish up today's analysis with the supporting evidence bond market over here. For what it's worth, I think this is agreeing with the trueflation metric, right? This tells us that the market is less concerned about inflation if this particular ratio moves lower, right? This is starting to maybe suggest a breakout over here. A little bit of help needs to come in for the labor market if that's the case. But for now, the inflation metric there certainly would say that the CPI maybe not as bad as we think. Let's jump on over into our credit spreads, which continue to signal risk on over here, moving lower. Let's jump into the HYG. It honestly continues to offer a bullish divergence. Let's zoom in on this for a second. Notice here the higher high. Notice here the lower high, right? I think it's very clear. This also caught it here versus here, the lower low on Wednesday in the S&P. HYG is saying, no, risk on environment looks pretty good. Now swap this out for an LQD, and suddenly you could start to see, all right, well, the corporate grade bonds are technically not faring as well with the pullback we're seeing over there. And does this make sense? Like, is that a reasonable thing to say? Well, of course. I mean, look no further than your MAGs. This is the MAG 7 ETF. I mean, you could see it in the sector market minder window over here. The MAG 7s just broke down technically into the end of last week. So as the LQD comes off, I mean, that would make a little bit more sense that the less risky bunch, which technically you would think the opposite for the market, right, is performing not as well. The riskier stuff, which maybe is a bit more aligned with what we have in IWM, is doing okay. But remember, this is a risk signal. It's a risk appetite signal. And so far, risk appetite in the more risky side of the market, HYG, seems to be holding up. Not really all that bad, right? Let's take a look over at the Bitcoin. Oh, let's look at Bitcoin. Why not? I do think that there's probably a trade here. If we go to the daily chart, I want to show you this real quick. And this is part of the trade ideas. Notice the hammer on Friday, right off the top edge of the bear flag. I am looking for a higher low to curl here and possibly send it back up to this pivot high. I mean, risk reward wise, if we could get something that looks like that roughly, that's pretty good, right? If we could get a 2-to-1 and, apply leverage there, you're probably even better on like an IBIT or something. Not bad. Not bad out of Bitcoin there. And once again, a little bit more of a risk on proxy here. Let's jump on into total breadth. This will mirror our IWM, of course, moving higher throughout the duration of the week, slightly more sideways on new highs versus lows. But take a look at the RSP out there at new record highs, even as the S&P 500 is more like, we're not sure, and closing here. Right? So that looks decent when it comes to breadth and market participation. QQQE, equal weight NASDAQ, same comment, not out to a new high, but look at it at the equal high versus the weighted NASDAQ, clearly not even close. Right? Let's jump into the volatility complex, see what we have over here. A little bit of a creeping higher. I think that this is reasonable headed into these tariff decisions and also kind of the tensions that we're seeing with the whole Greenland debacle. It would seem reasonable that, not to overuse the word, people are continuing to put on insurance. Reasonable. Let's get into the VVIX, which is actually underneath the trigger. So 103 is like the alarm trigger. Close right under it on Friday. I'd be curious to see if we just ramp right back up in on the current upcoming week. Let's get on into the vol futures. Still showing a contango here, and still just kind of neutral on the one-day VIX as well. Skew in terms of reaching for insurance also at the high of this most local range. Hasn't really broken out. I would still say that it's pretty status quo when it comes to volatility. We haven't done anything crazy keyword yet. We'll see what the posts look like as we move through the weekend and into the week ahead. Let's get into the core list of companies, which honestly is not so compelling these days, but we'll see what's happening over here just because they're so heavily weighted for the S&P. I think NVIDIA is just a sloppy chart. There's really not much to do inside this range. I don't remember the last time I traded NVIDIA. It's maybe trying to build out a higher low from here to here. It's still well underneath the earnings gap high from back here. We're trying to hold the 20, trying to hold the 50. It's not clear. It's not sloppy, or it is sloppy, I should say. But as the heaviest weight company in the S&P, as long as it's not going down, as long as we're not threatening these lows here, I think we're okay in the S&P 500. Now, if you start to lose this low from what was Wednesday, that's where I think trouble starts. For now, I would say the early focus this week is, do we get a gap fill reversal? Really weak close on Friday. Do we get gap fill reversal that maybe looks something along these lines? That would be the watch out of NVIDIA to keep us bullish and preventing the outright quote collapse in the S&P 500. Let's go on over to Apple. This is undoubtedly bearish. There's just no way to cut this on the bull side. We've got ourselves neckline of the head and shoulders, bear flag starting to go on Friday. This gap close, and really 250 is the big level I would pay attention to from a weekly perspective for dollar cost averagers to start to step up. If they don't step up there, then I think you got a date with the 200 SMA here for a hard reset on Apple. So bearish until proven otherwise. If this does go look below and fail into the gap, and maybe we get a higher low over 255.65, I don't think I would long through this range here, just to get up to the high, but I would pay attention to this, right? Anybody who's piling into shorts here thinking, okay, here we go, bear flag, they probably have stops over this high. I would look for this as a trade, and then when we get here, that is where you put the shorts back on, I would think, for a possible lower high on the daily chart under the neckline at the 20 SMA. Really what's been a standout over the last week of trade, you want to trade A+ daily levels. You don't want to get involved in the chop and slop. You don't want to get involved in the chop and slop. Trade the big obvious levels. If there's a lower high here on Apple, there's probably a reasonable trade to take against it, right? So that's what I'll be watching there. Why do I say trade the obvious levels? Because take a look at nothing other than Microsoft. In this zone, there was, you could try to force stuff in there if you'd like, but the best trade on Microsoft came on Wednesday when it finally broke down from the range and got follow through. Everybody knew that this was the bottom end of the range here at 468. When it broke, it followed through. So when I say on Apple, trade the big level, that's exactly what I mean. That's where you're going to get the follow through. So on Microsoft, the next steps are either to look for the lower high at the big bad level, 468, or to play the inside day breakdown underneath the 3-day equal low and just get continuation from a big bad weekly bear flag breakdown. If I go here for a second, it'll break the volume. That's fine down here. But take a look. This is a massive, nasty weekly bear pennant. We finally sweep the lows. We are not holding the daily 200 SMA anymore. We're underneath that. Got thin structure. I'm not saying we have to close the gap all the way, but there's not much here. I think you could get follow through to the downward direction on Microsoft's higher time frame. Just kind of noting the amount of time we spent sideways, and now we're losing, the moving averages, and we know software has been getting hammered, right? What's a potential excuse me. Sorry about that. What's the potential thesis here behind software getting hammered? I mean, I don't know about you, but in my feed, all I see is Claude Code AI. Just replacing, software engineers, building new things, one-shotting projects. You give it a prompt and it spits out nearly code or production code ready style results. I mean, that's going to put the pressure on. Look no further than Elon Musk making macro hard. Right? Just building all software under the bundle and guise of AI, no sort of corporation structure that, you got to pay all these middle managers. No, here it is. The software can build itself. It's all technically out there, right? So if that's the thesis on software and it's really going to get commoditized as basically zero cost, it makes sense that Microsoft is maybe coming in here, right? What's another thing? I think a lot of people are losing some trust around the OpenAI case and what's going on with Sam Altman right now. So if they start losing users over on OpenAI, they just launched ads over there. It clearly seems like, hey, we're just trying to scrounge up the money. It doesn't look great on the Microsoft thesis. So, under these lows probably could get interesting as a bear flag breakdown. You've had two really major earnings announcements now that caused a gap up and just faded under the neckline of a double top, bear flag consolidation. So losing that 200 was a big deal. I do think that this is a bearish headwind for sure out of Microsoft. So those are my thoughts. You might think, oh, I'm crazy and whatnot, but that's just what the chart would suggest. Let's see what's going on with Amazon. Amazon, on the other hand, forget about AI and forget about even the package, or not package, but rather site. Think about their logistics business. Think about their robotics business. This is pretty cool here out of Amazon. Clear relative strength compared to a Microsoft. Microsoft said, nope, I'm going the other way out of the bear flag, right? Something like that. So Amazon has a big opportunity for a higher low over the 20 inside hammer on the Friday session. Really just watching that as a 3-day range. If we can get up and out of, you could even start to think of that through the lens of double bottom. If you could do this, great, looks pretty darn good supporting the moving averages. I would really focus on the 239.50 spot. If it does break down from this bear flag, I do not want the full measured move. I want it to short stop here. 50 SMA, 233.25 is the next major higher low, noting that's the origin of the breakdown. Right? If you get this, fine, but really you got to step up there and put the pedal to the metal back on the long side, 233.25. It's your daily higher low here with the indication of a hammer and, starting to get doji-esque on Thursday. Maybe the pullback has been deep enough. We'll see if this ultimately yields the higher low. But so far, the trend is still working itself in the upward direction. I want to stick with that for as long as possible. Google, another big winner here in the AI space, not necessarily software related, but just, data, the amount of data they have as a commodity, huge, like as one of the winners, I suppose, in the AI race, and really starting to get the job done, I think, with the whole Gemini thing. Anyways, what's going on with the Goog? It's just consolidating up here. I've been saying this for the last couple of weeks, and I still feel this way. It's been a little tough to get positioned in some of the way that these days have unfolded. So as it pulls back, I'm primarily interested in this level at 322. If you're not already long Google, I would be watching that for the daily 20 SMA kiss and the possibility of a higher low. It's the breakout level. It is the origin, right? So we'll see if we go back there and can support. If it does just hang high and tight, then, it's hard to fight. It's a clear winner. It's not breaking down like the rest of tech, and rightfully so, but maybe something like that is a go with on enough consolidation, but probably needs to go a little bit more sideways up here and build out a nice flag before I'm compelled to do so. If we look at the hourly chart, you could see once again, it's not like it's lost a lot of ground on the daily, but intraday, like it's been pop, fade. Here and then like open on higher, fade, open higher, fade. In here, you opened higher, you faded and it did nothing all day. Pop, rallied, came all the way back down. It's been really, really tough, right? This is why I'm saying, it's kind of difficult to get positioned in Google unless you just buy it and forget about it and look, 5 weeks, 5 months, heck, for that matter, later. So we'll watch and see what happens there. You could probably strike a trend line and see if it breaks it for additional confluence on the long side. Let's get back on over and keep moving. Broadcom, I don't really love the chart. I think this one also needs a hard reset. It's one of the semiconductors that's not performing. It's very similar to NVIDIA. I would say NVIDIA even looks better than Broadcom does, but you're just getting pinned underneath the 50. You're just in a bear flag here from this perspective. It might be a little, what would you say, like a little selfish, or like the market might not give us what we want. The market doesn't really care what we want, but I would prefer to see a hard reset on this thing down towards the gap. Right? Do something near the daily 200 SMA, either like entice a bunch of new money buyers to get involved in this thing down here, but like you can't just keep going sideways. There's really not much in the way of, at least for day trading and even small swings, there's not much to really do with it inside this range. So I'm just going to let it be. Unless we kick out the 50 and really get ramping up towards this overhead gap, that's the other alternative. Maybe it goes double bottom here, but I just don't see it based on the way it's been acting recently. Very, very stubborn, very, very sideways, and not participating with some of the new semiconductor leaders, which we'll get into at the end of the video here. Metaverse, when I was saying earlier, just trade the most obvious levels. How many months, I mean, it's really just a month and a half, but how many weeks have we been saying, like, we got to be here into the gap above, or we got to be here into the thin structure below? Well, on Tuesday, your prayers were answered. You broke the 50. You broke this 637.50. Awesome trades on the Tuesday session. Same thing with Apple. Same thing with everything going forward. Trade the best daily levels. Don't bother with the chop and slop. I'm pleased to have sort of dodged the paper cuts over here on Meta. Didn't do as good of a job of that over on Tesla, but for now, it's just the lesson that continues to stick. So we'll see if this lower high on Friday is going to continue the downside on Meta. The XLC, as we know, is starting to break down. I would look for moves into this range down below, 604, 583.25. Let's go on out to an hourly chart. Looks nothing more than a bear flag here, break the lows, and continue in the downward direction. Rally through the highs and set the cleaner lower high here up against the daily 50 SMA, the blue moving average on the screen, 637.50 retest lower high. I would be, all over the watch at least for a short opportunity there if it does present itself. Let's jump on into, Tesla, there it is. I want to skip it because I hate the chart, but unfortunately cannot do that. Tesla, it's just been a very fickle name to try to get postured in, both up here, like no momentum follow through off of this gap situation that it was dealing with. Totally fell apart, didn't really hold the 50. Came back above. This is now back, but like just all over the place, trying to look for a right shoulder to build out on the inverted head and shoulders, be early to the neckline break. The Friday bar looks horrible. I just got it. There's no way around it. If you look at this early morning rally that was promptly reversed, right in, the close doesn't look good, really heavy there on the close. So my main idea on Tesla is I got some swing shares on it near the 50. I'll have to let those go underneath the Wednesday low, and I will probably try to maybe look for the short into the mosquito pattern low if that takes place. Just noting that a lot of traders in a similar position trying to position in this higher low attempt from here to here may not be so successful, and we'll have a automated stop on that low and actively look to participate in the downside if it's going to sweep to hedge against. Basically, it's a hedge against with an intraday trade, right, on some puts for Tesla. We shall see. But 435 is the number that needs to give way. Brigade bolt, and you've really got nothing into the head of this pattern ultimately on the hourly timescale, which is a major prior level as well. Right? It was the breakout level from back over here, Brigade bolt above, and now we would be revisiting that area to 424. So that's the short-term Tesla. If it does turn around and just wants to be in here, then fine, the thesis lives on, but you can't really afford to violate that Wednesday low by very much. Let's jump on over to JP Morgan. Nasty day post-earnings. You could see just really, really poor through the 50 simple moving average. Big upper wicks in the last 3 days worth of trade, so trying to rally back but getting sold off hard into the close. As of right now, this looks more to me like a failed breakout, lower high inside the range, and that it should be on its way lower for at least a test of these lows in here, closer to about 295. We'll take it day by day. We would have to sweep this low at 307.25 and come into the major reversal at $300.25. That's the first step, but ultimately, again, this 294, 295 would be the next stop if that gives way. If we do get back over the level, then fine, financials may continue to perform well. I just don't know that it's my first choice to, on the hourly chart, start trading aggressively into that large red-bodied bar. It's not like a clean bullish setup where you're trading a nice uptrend. It's much harder than that on JP Morgan. Next up, Palantir finally starting to give way. It just took forever for it to pick a direction, but that is just sort of trading. So at the bottom end of the junk drawer range, on a nice breakdown there on Friday, we'll see if it gets momentum follow through early on in the week. I've been saying for a little while that I think that this is maybe a bit more of a head and shoulders, but it hasn't really been rewarding to short it inside this range until, of course, on that Friday session. So continuing to watch and monitor for the downside situation. I don't know about being short directly into this major support from prior, right? So unless you caught it off the 20 and you were trying to short the highs of this range, I don't know about new shorts smack on the low in here until we really build out maybe a flag and then go and kiss the 200. That's a possibility here ahead of earnings if it's really going to wash out. So monitoring Palantir for some downside early on in the coming weeks, and major lower highs just need to sustain themselves underneath this 175.50. If we jump on over to AMD, inside day on Friday, I think that this stock has been showing incredible relative strength recently with this big push higher on the Monday session. You could say Tuesday, Wednesday, certainly up while the market was down. Big gap up on the TSM earnings. It gave all of it back, right? Closing unchanged, but look at Friday, just an inside bar. So two unfilled gaps, great relative strength. If this can consolidate, close one of the gaps and then go, awesome. Brigade bolt here, looking for this previous rejection point before the breakdown. That's a possibility. I think, again, the stock's been showing some good strength here inside this range, moving to and through the top end of the balance, and now trying to balance off over the top with possibility higher low on a gap fill reversal. So repair the structure, stay above the moving average stack. That would be ideal here. 227.30 and 223.25 as key downside levels. Next up, Robinhood. Another one that's been brutalized, so down over 7% on the Thursday session, a little bit of follow through there on Friday. If we jump on over to the daily chart, we've finally started to give way underneath this range. Little hammer-esque on the low of day from Friday. I would be open-minded to a lower high under 114 to stage a new short there and then target the equal low. If it just continues, I would maybe play counter trend off the 200 SMA if we have enough evidence intraday that buyers are starting to step up. If I'm going to take that trade, you darn well better believe that I'm looking for the S&P and the Nasdaq to be strong at the same time if I'm going to take Robinhood at the 200. If the Nasdaq and the S&P are bleeding out, probably not bottom fishing there and probably not trying to stand in front of a moving freight train, which is a really large time frame starting to develop, right? Head and shoulders here, and you could probably strike a neckline, something like that, move through the neckline. Why fight that if the broad market's also moving to the downside? 200 SMA bounce, maybe, but I think the more attractive opportunity is let the options implied volatility really expand on a breakdown and see if you could start selling some. I'll just say what I'm going to do. I'm going to look to see if I can start selling some puts underneath this prior high, right? IV isn't really there yet for it, but on a nice strong breakdown, another 10% weak to the downside plus, maybe there's enough IV pumped into the options for it. So that's the core list of companies. Again, some of them are pretty lackluster, even our top dog NVDA there. So I've got a majority of ideas coming from the data center space. It's really old crypto miners turned data center. Let's go CleanSpark, CleanSpark over here. I don't think this is quite ready yet, but just take a look at the chart structure, right? This looks decent, trying to work its way into a series of higher lows. I would like to see this Brigade bolt over this prior area in here at 15.15. So I think it's a stock that you should have on your radar as one of these data center proxy plays. And what it reminds me of is HUT, right? If I look at HUT, it is similar in the sense that you had a prior area of resistance. You start, and you could even say here's that same double bottom, right? You got yourself over it, and now you're offering Brigade bolt over the 20, over this prior high. It looks pretty darn good here on HUT, and they actually just signed a contract, right? Pretty recently, it was in here to start providing data center services rather than crypto mining. So that's HUT. Riot Blockchain is RIOT is also in a similar situation where you could see the same thing with CleanSpark, right? There's your double bottom. If you can clear that high, Brigade bolt above, you probably want to be involved in these types of things, right? You could look at Amara, which is Marathon Digital Holdings. Let me make sure I'm looking at the right one here. Marathon Holding. Yes, I want to make sure we're not looking at MPC, Marathon Petroleum, right? Let's maybe clear all this up. This one does not look as good, I must say. This one looks much worse, but that's Mara. Let's go on over to a Cipher, CIFR. This one looks much better, right? So here's Cipher. You probably have prior highs you want to pay attention to here. You're already getting an interesting interface off of the 2-day high from what would have been the Tuesday and Wednesday session. You broke that high on Friday, couldn't quite close above, but not bad. Starting to work itself once again into these higher lows. And you've got a level in here around 2065 that you could also look for the Brigade bolt above to get long into these highs back over there. That's Cipher. You could see the same thing on really Applied Digital just came out, right? It looks very similar after earnings. Here's your double bottom starting to flag out over the retest level here. The Hive, HIVE, is another one. I don't think you're all the way there yet. Again, this one doesn't look as good. Cheaper price point, so please be careful. But it is starting to flag out over this prior resistance, over 360. Origin of the breakdown here at 475. Another one, CORZ. CORZ, there we go. Same concept. You can see how similar all of these charts are, right? And rightfully so. They're all doing the same thing. It's old crypto miners turned data centers. That's cores. And then we have probably the newest kid on the block, GLXY, Galaxy. Shout out to Tom. And this thing just looks great. Look at the explosive move off the daily 200 SMA. Any pullbacks over this 30-30 for a higher low, mindful of earnings. But that's not bad, right? They just signed a new deal as well to be involved at Helios down in Texas. So that's that one. Did I miss any? That's all the ones that come to mind. Of course, the biggest ones are the IRENs of the world. IREN, nice move higher over here. NBIS of the world, right? This thing's already on the move up and out of its area here. I'm trying to show you the ones that haven't quite made the same move yet or have the potential to sign new deals to act as a catalyst. The ones that are a little bit flying under the radar. Let's go on over to Quantums, IONQ. This stuff just looks incredibly tight to me over here. Look at how, just sideways back and forth we are at the moving averages. It's a tight risk way to get involved in something. If it is going to break, go here and then really start to get running back up through some of the backside move from here. I think, you got a tight risk way to do it. And this is probably more for swing traders or people who want to put some shares on and just let it run. This to this, let's just play it out. If it does make it back up to the bottom end of this range, maybe that's like a 2, 3, 4 to 1. If you play it properly, you probably get an even tighter stop on it if it's going to make the actual move. There's nothing saying it has to be perfectly linear, but here's an example of linear in the past. Maybe it goes linear again on an IONQ. We'll see what the Quantums do. It's probably not going to happen if the Nasdaq's breaking down in a big way. Just keep that in the back of your mind. You want the risk-on environment to be pretty clear. RGTI, of course, in the same space, getting tight here at the 50. I don't think the upside levels are as clean, right? You can see how this and this is a lower high. This is still a lower high versus IONQ. Flat highs across the top. QBTS is the other one in the space that's worth paying attention to. A little bit more of that flat top base versus a lower high, and the origin of the breakdown target there is 3750 roughly as a potential target on the top side. And again, higher lows. Not bad. Trying to ride and surf the 20. We'll see where it goes. We'll save that one for last. But let's go on over to, let's go to those rare earths that we were talking about. USAR is the first one that comes to mind here. And this is just a simple double bottom, right, with the possibility to move up and through this flag top. I think the tensions are right. I think the headlines are poised for this stuff to move perfectly. You've got a gap to close overhead, which is worth paying attention to. 2350 and 2225 are going to be the levels to pay attention to. If you Brigade bolt over 1865, there is your trade on one of the rare earths. That's USAR. We can jump on over to UUUU. That's Quad U. This one's already seemed to have gone, so you can see my alerts here are really for pullbacks into this area. If it's going to come in, stage a higher low, I want to see it catch up to the 20 and do something in there, roughly around about $18. That's UUUU. Doesn't look as good as USAR. UAMY is another one here. And you can see that we've got that same flat top, just like on USAR. If we take that out, maybe there's a chance to come in here. It also wouldn't be the worst thing in the world to sort of cool off and build out a little bit more of a classic cup and handle here on the right side, test the moving averages, wash out these lows, and then make the move up into this gap above. That's UAMY. CRML, I think, is the best one poised for the Greenland specific news. You could see a nice inside day on Thursday, Friday, a little bit of an outside bar sweeping the low and then, technically the high as well, but closing fairly decent. So I would watch this very carefully to see if we can get some rock and roll up and over those equal highs. Of course, the high of the Wednesday session much closer to about 1925 as a technical level. That looks pretty good. And then MP is the last of the bunch that I at least have on my radar. If you've got other rare earths, minerals, whatever, for the Greenland trade, the headlines that should or may come out over the weekend, feel free to let us know down below in the comment section. Unless you want to protect the alpha for yourself, no problem. You do your own thing. But these are just some of the names that I'm looking for. MP also doesn't look half bad up and out over this zone here around 67. Thin structure to retrace off to our left if it really gets going on these headlines. Let's talk about OKLO. Nuclear front over here. The reason I'm interested in this is because, of course, the deal they signed with Meta, they actually have dollars headed to the bottom line now, hopefully. This potentially is going to build out a right shoulder here. I just want to watch for that right shoulder to see if it is in play. This gap up was the Meta headline, and it is the neckline of both. Actually, it's the conjoined twins pattern. If you guys recall, there's the conjoined twins. You're sharing a neckline with your regular head and shoulders to now act as the neckline of your inverted head and shoulders. So around 110.75, 111, that's certainly not the gap level, but that is the major inflection point that we can see from a weekly perspective. I like the fact that we've pulled back, and now we have a look below and fail on this 90, it's really closer to 9130s area. We'll probably adjust this on the hourly chart. Yep. I would come in here with about 91.75, let's call it, 91.75. That looks pretty good to me. And as long as we could stay over that now, I would look for this thing to work its way back higher out of, once again, concept here being a major right shoulder build out now that they at least have a deal under their belt with Meta. So that is that. And then the final one, which we alluded to a little bit already, is going to be on MSTR. Because of what's going on with Bitcoin. Let's start on the daily time scale. It's finally broken out of this little flat bottom that it's been building down here. It pulled back hard off the 50, but look at this hammer from Friday's session. We talked about BTC, the futures, already setting up a hammer over their bear flag highs as well. I think MSTR could be a way to trade this back up towards these highs from the Wednesday session. If we just take it on down to the hourly, your technical target up there is going to be closer to about 186 on MSTR. Really like the opportunity for just a very simple Brigade bolt on the hourly to head back up there, and probably looking for a break over that Friday high about 173.65 will do as a short-term nuanced level to have on the radar. You could also throw coin into the mix. I don't think it looks as good personally. Take a look at this, right? You're really all the way back down on the lows, and we know that there's some headwinds going on here with CEO Brian Armstrong there in, what was it? They're sort of like doing battle with interest rates and what the average rate's going to be for banks and whatnot. So getting a little bit dicey in the headlines. I think the MSTR is an easier way to just play basically a levered version of Bitcoin. If you want to use the IBIT, there's no problem doing that either. You can see it's almost the same setup where you've got this bear flag high, there's your hammer. It's a proxy for Bitcoin, right? And there are options available on IBIT. There's also levered versions of all of this stuff in the ETF world you could check out as well. That's what I've got for you in today's episode and installation of the weekly watch list. If you enjoyed the video or learned anything new, let me know down below in the comment section, or simply give the video a thumbs up. It is a long weekend, so please enjoy your Mondays. The market will not be open, so do not show up to the desk to trade unless you just want to check in on some charts. Haven't really decided whether or not we'll do a pre-market prep stream just to look at charts and talk about whatever's going on through the weekend. I guess I'll do the YouTuber thing that we should do and say, hey, hit the bell button, subscribe, notifications on, and that way you can find out on Monday whether or not we go live. With that said, I hope you have a green and fantastic trading week ahead, and as always, I will see you in the next one.